Hello, Oracles! Well, today I remembered to put on the right colored shirt, and unfortunately, it's red. We had a bit of a sell-off into the end of the day today, basically traded flat for most of the day, but in anticipation of the CPI data we are getting tomorrow morning at 8:30 Eastern Standard Time, the market decided to sell off. So, we kind of anticipated this. We'll probably see a bit of red tomorrow morning pre-market, and then we'll get the numbers. And again, the numbers do come out pre-market, so that's really going to kind of set the stage for how the day is going to go. My dad is predicting that we're going to go green after we get the numbers. Now again, we're expecting an 8.8% headline number and a 1.1% month-over-month number. Now last month we had a headline number of 8.6%, and the market did end up going green that day, but then we had a massive sell-off the next day. So maybe that plays out this time around. I'm not sure, because last time we got the Fed minutes, we saw the same exact thing happen. But this time when we got the Fed minutes, we were kind of just slightly green and then saw a lot more green the next day. So we may end up following the same trend of either one of those. So again, we'll monitor tomorrow. We're already seeing headlines of potential 9% inflation headline numbers coming in, which are just going to freak the market out even more. That may be why we saw a bit of a sell-off at the end of the day today, with an anticipation of a higher than expected reading again. And now all year long, I have been noticing a pattern and trend going on with my portfolio. I've basically been trading sideways all year long. I really have not changed much in the value of my portfolio, despite the fact that I am putting in money every single week. So some may think, well, that's kind of stupid. You're basically just throwing your money away. And you can argue that point if I was going to be a short-term trader. As a long-term investor, this is where dollar cost averaging comes into play. You look back at anybody who dollar cost averaged through times like this, like the housing recession and the dot-com bubble, they would have seen basically the exact same thing happening in their portfolios with their dollar cost averaging. The difference is, all along the way, they were bringing their cost basis down. And so by bringing their cost basis down, what ends up happening is when the market does turn around and go back into a bull market again, you're going to see your profits gain that much more because you are adding more and more shares. Sure, you can argue that perhaps I should wait for the actual bottom and then dump more money in then, but I honestly don't know when the bottom's going to be. Signs do point to us either staying down at these levels for quite a while or coming down a little bit further, way more than they point to us actually coming out of this anytime soon. But for me, I don't know which way we're going to go. I don't know if we're just going to be flatlined basically where we're at now, or if we're going to go lower. So that's why my strategy is to dollar cost average, but also put a good chunk of money into cash stockpile. So if we do fall further, I will have that lump sum to be able to add in heavier at that point. I do have cash flow generation, which means that I can continue to add as we drop, and I'll have even more money to add the more we drop. So that's just my personal strategy as we're going along with this to bring my cost basis down. And so for me, while it looks like the stock market is playing a magic vanishing trick with all of my money, it is very much like a magic trick where, yes, my money is looking like it's vanishing right now, but it's going to reappear later like magic, but it's going to be even more exciting to see it later because it's going to reappear, and it's going to be reappearing as even more money than I had before. And that's all because I was adding and accumulating as many shares as possible. So when you're accumulating shares when they're at a lower price, you actually get more and you'll have a bigger return on your investment later. So again, the argument can be made, wait till we actually see the turnaround, but you also have to remember that the market looks ahead 6 months. So if the market's looking ahead 6 months, if you think that you have seen the bottom when the market starts to turn around, the market's already way ahead of you. So you're going to be 6 months behind the market as it turns around. So that's why timing can be so difficult as a long-term investor, and dollar cost averaging has historically been better for your investments long-term. And so some good signs that we saw today: oil prices are coming down. This is a great sign. This is something we had talked about previously about that's really the first thing we need to see start coming down to really start getting inflation in line. We need oil prices and commodities to come down. These are things that the Fed really cannot control the same way as they can control core CPI. So for these numbers to come down now, we'll see that reflecting in August CPI when we're going to get the July numbers. So for July, when we see them tomorrow, it's probably still going to be ugly because we didn't see oil prices start coming down until this past week. So we're going to see what the Fed is going to say, because if the numbers do come in higher than expected, we'll probably see a 100 basis point hike coming at the end of the month at the FOMC meeting. Now, if that ends up being the case, and then we see CPI data coming in August, and we come in lower than expected, which I am anticipating based upon oil prices coming down, and if we continue that trend, we will continue to see that trend of prices coming down. So if that is the case, then we might actually see the Fed do that U-turn that we have been discussing potentially in September. It's not going to be a true U-turn. It's going to be more of a dovish stance U-turn where they go from, hey, we're hawkish and really need to crank up interest rates, to, all right, time to put the brakes on before we raise interest rates too high too fast. And that little bit could be what the market needs to boost a rally to go into the end of the year. So again, we'll wait and see what happens when it comes to CPI. But another thought I had about the fact that my money is basically vanishing at the moment is the Fed has to run off its balance sheet. Now, it started this on June 1st by taking out $47.5 billion worth of money out of circulation by reducing purchase of treasuries. So by doing this, they're whittling it down. On September 1st, that number is going to go up to $95 billion. Now, based on Vanguard's estimates, they're at about $8.5 trillion right now, and they're going to want to work that down to about $5 trillion. So this is going to take some time at the pace that they are going to pull this money out of the economy. And in doing so, this is one of the reasons why, despite the fact that we do have high inflation, putting cash on the sidelines and holding money in cash versus investing it is a wise strategy. Because when you take money out of the economy, that is reducing the supply. When you reduce the supply of money, that in turn makes the value of it go up. So that's kind of the trend that we're on right now. And as money comes out of the entire economy, people are like, all right, well, I'm having cash over here, but I have a lot of money I need to spend on higher and more expensive goods just to get by on things. But where do I want to put my money for investments? Because this money is actually technically becoming more valuable because it's, more scarce technically, even though we have a ton of it still in the economy. But because there's less out there, that's less money that's getting invested, which is why we see the entire market pulling down. This could also be why we're seeing everything, literally everything pulling down, whereas we're thinking, hey, crypto was an inflation hedge. That didn't turn out to be true. We thought, hey, well, when oil prices come down, the stock market will go back up. That hasn't really played out either. It's kind of like on our way down, things are balancing themselves off with one and the other. And of course, because it's the stock market and people are trying to make profits, one little thing will get boosted at one point just to make some profits. And then, as that comes down further, it's kind of this stepping down all along the way until we truly find a bottom. So when you're looking at individual stocks and companies to own, this is why stocks that are profitless companies are just taking an absolute bloodbath, because there's no profits. There's no money to be made there. They might not even make it through this time that we're going through. You look at companies like Tesla, Amazon, Google, Apple. These are companies, and even the value plays to be in are companies that you want to be in. Maybe they have dividends. Companies that have cash flow, they have strong demand, they will be out there surviving all of this, and that's why these companies are holding up stronger. It was great to see Tesla holding up at that 700 level. They did close just below it, and now after market, they are pulling down even further. But again, that's probably because we're going into CPI data and the entire market is selling off. Tesla did technically outperform the market today, so that's a great sign for Tesla. And there's going to be other companies that are like that. Those are like the blue chip stocks that you want to be in if you're going to be investing at these times and not just holding all cash, because those are the companies that are going to come through this. And when we do get through these times, those are the companies that are going to come out first and strongest. But in the meantime, I do recognize the fact that we are not going to be coming out of this for probably at least 12 months. That's my guess, is minimum 12 months before we truly start to see, us coming out of it. We're probably going to hit the bottom before then, but there's going to be a lot of sideways trading. It's just going to be a lot of, ugly, uncertain, bearish times. That's just the truth of the matter, is that's where we're at right now. That's why I'm dollar cost averaging, but also saving that cash. Because if we do go into this Q2 earnings season, we do see an earnings recession starting to come on, that is just a sign of inflation coming down. That's really what it is. You have inflation going high. I've seen it in my company itself. Prices are inflated for everything across the board, so your numbers year over year are also going to look inflated. When you start coming down with prices, guess what? Your year over year numbers, unless you're able to pick up units or you have a high growth company like a Tesla, you're going to see your earnings come down. It's just natural for it to go in that path, and we're going to see that. And as there's less money in the economy, there's going to be less money going into the stock market and companies. We just need to re-find our footing. That's just where we're at. It's a natural, good thing to actually go through. This is a good thing that we're seeing. We're just going to have to go through it. You can't always have a bull market. Just not normal. And again, we're going to get through this. It's going to be painful, but just come up with whatever strategy works for you. And if you're one who is all in and you don't even like watching the market because it's so ugly, then go outside and enjoy yourself. Go enjoy family and friends. Do whatever you need to do to take your mind off of the stock market and come back in a year or so and check to see how things are going. Because honestly, that's just really where we're going to be. But for me, I also take these times to learn, because usually going through difficult times like this are the times you can actually learn the most. Going through a bull market, you don't really learn much. When things are good, what do you need to learn? You're like, hey, things are awesome. That's great. You don't have to learn to get through stuff. Just about like anything else you see in life, when you're going through tough times, that's when you learn the most. When you're with someone and maybe you have a relationship with them and you're going through some tough times, those are the times you learn the most about that person. How is this person handling life during times when they're difficult? Because when times are good, everything's always good. It's always going to be good. Everybody's happy and joyful. But when times get tough, how do you handle it? That's how you learn. You're going to learn about the stock market. You're going to learn about yourself. You're going to learn how to be able to get through this, because these times will happen again. It's not like we're going to never go through a bear market again. It's going to happen. Take this time to learn how the stock market handles it itself. And so in doing so, when we go through these times again, you will know how to better invest during those times. Because really, this is a relationship between you and the stock market, you and your investments and your portfolio. So how is it behaving, and how can you treat it better during those bearish times? And for me, during these bearish times, I keep on feeding that bear a little bit every single day. And then I also put a little extra food on the side for that bear just in case it gets a little hungrier later on. That's just how I handle it. We all do it in our own different ways based on our own experiences and how we are with our own investments, with our own finances. It is whatever you do for your own portfolio. And I'd love for you guys to share down in the comments what it is that you do during these times to get through them. Are you investing regularly? Are you holding cash on the side? Are you taking these times to learn? What have you learned about this market? Because to me, that's a huge piece of this, because yes, it looks like my money is vanishing. I know, and I have confidence that I'm going to get that money back in the future, but what I'm gaining from putting this money in the market now is knowledge and wisdom. And let me know in the comments below what wisdom you have gained from this, because honestly, it's great for you to share with all of us. And it's helpful for all of us to learn the wisdom that we have all gained during these times, because some of us are new to the market, some of us have been around for a while, but even people who have been around for a while can still learn new things. So definitely share in the comments what wisdom you have gained during these times so far. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, I do have a Patreon. That link is also in the description. Thank you so much. Have a great one.